the bulls are looking slightly rusty. The fact that global cues have reversed, how much importance would you pay to that?
So I would say global cues have not reversed in a big way. We've seen say a dip across the world as well as in India, a little lesser dip in India comparatively. But overall, we are still in a slow and steady downdrift which happened. So the view is we've not broken any of the important support levels in the global indices or in Indian indices. So till the time we don't break that, the bias should remain positive. The stock specific price action is decent. We are not seeing some cracks in say broader markets or in say certain stocks. So overall, the bias is positive. 18,600 remains the crucial point. Only once we start closing below that is the time where we change the view. Till that point of time, be stock specific. We are seeing new sectors come up. Yesterday was a day when Nifty Auto Index gave a good close, and it has seen a lot of names in the basket, in the auto basket, showing good momentum. Auto ancillaries have continued to be in a strong uptrend. So autos is one space which has come up in a momentum radar yesterday. So overall, one by one, we are seeing a lot of stocks on radar. The only difference is auto does not have a major weight on the Nifty. It's just the heavyweights which are not pulling up.
I go back to that point again, Nooresh, that minus Reliance, minus Reliance, minus HDFC Bank, minus even ICICI Bank now, and Infosys, 4 stocks.
And you have 40% of the index not going anywhere. But the fact is, these names are not falling down also as well. So we are not seeing a sharp crack. So we see this 2450 to 24550 move on Reliance, then it goes back to 2500. You see this move on HDFC Bank going from 1650 to 1580, then back to 1630. So we are not seeing a crack. ICICI Bank broke a 2-week low of 930.35 and could only correct up till 920.25. So what we are seeing is we are not seeing a crack in the heavyweights. Neither is there momentum in the heavyweights. But when we look at the rest of the weights, there is a lot of momentum. There are a lot of stocks near all-time highs. So you have a L&T closer to an all-time high. You are seeing auto stocks coming closer to an all-time high. And then you have NBFCs, which are some of the smaller names which are at an all-time high. So the case is 40% of the index is not showing any trend, neither a downtrend or an uptrend, but the rest of the names are continuing to move selectively. So in this condition, we get jammed into a range. So till the time we don't see a range breakout, or at least one of the heavyweights taking a breakout or a breakdown move, we'll stay jammed in this range. But in that period, you can continue to look at broader market stock specific moves. So the view is till the time we don't change prices below 18,600, and this has been the best way to actually ride the whole move. From 17,000, if you would have kept having this view of till the time we don't take support levels, you would be riding up till now. Otherwise, you would have got, say, at some point of time, you would have said enough is enough.
Right. Okay, let's take it across to Kunal as well, find out what he's making of the market texture this morning. Kunal, hi, morning. Pretty quiet and listless of a Monday. What's in store for us, given that the handover from the globe is a little weak?
Yeah, but I think we are still consolidating. So, 18,600 has been a major support. We've tested the support, I think, over the last 10 days, but we've not broken those levels on the spot basis for the index. And for the Bank Nifty, I think 43,000, 43,500 has been a major support. In fact, it's almost 6 or 7 straight weeks of consolidation for Bank Nifty, where it's been stuck into a 1,000-point band, which is just 2%, 2.2% for a heavyweight index like the banking. So that itself tells you the kind of consolidation we are seeing into one of the major sectors for the index. Now there was one interesting part about the markets yesterday, that we managed to bounce back or protect the 50-day moving average for the Nifty, and that's been characteristic of this trend over the last 2-3 months from the March lows, where the Nifty bottomed out at 16,000 approximately. So from there, we've managed to protect the 50-day moving average, and I think every time we've managed to go into a corrective phase, we've managed to test those levels. The bounce has led to a new high on the index, at least on a swing basis. So we can expect something similar for the index, possibly in the next or the start of the July series. So far, the good part or the differentiating part for the rollovers, for the July series, is the premium for the July futures on the Nifty is at 110 points. So last expiry, we were almost at 80-85 points, which means there is a slight increase in the premium for the index futures. That tells you that maybe the markets are going with a bullish expectation for the July series.
Okay, let's